Thank you so much for joining us. We're talking about the economic plight, or not plight, but perhaps like winning of Gen Z. So we have two actual Gen Zers. We got Kyla Scanlon, who is like I wouldn't want to say the Gen Z economic whisperer, 'cause she's kind of a whisperer for a lot of generations. So, but happens to be Gen Z and an economic sort of guru. We've got Ed Elson, who also is in true Gen Z fashion, making a big splash with podcasting and explaining the world to people. So this is going to be an exceptionally fun conversation. So as you just heard, when we think Gen Z, we think sports betting, we think crypto, but I feel like the stereotype of the youngins is always, they're so risk averse. They had to have everything managed for them on the playground, and they can't handle setbacks. So how do we square this sort of really aggressive risk taking in their financial lives with this perception that Gen Z is exceptionally risk averse?
Sure. Wow, that's really loud. Good to be here. Thank you for having me. Good to see everyone. Yeah, that's an interesting one. I think of Gen Z, and I wonder if the distinction lies somewhere between our physical lives and our digital lives. I think I could understand that there is a perception that we are risk averse in the physical world just by virtue of the fact that we're not really participating in the physical world. I think probably the statistic that I'm kind of obsessed with, that I think informs probably everything, both of the points that you just made and this entire discussion, is the fact that a third of us in Gen Z are still living with our parents. And just to be clear on what we're describing, these are people up to 29 years old. So, we are pretty much adults at this point. But many of us, there's the trope of the young person sort of living in their basement trading crypto. That is like a legitimately true picture of a lot of young people. So I guess the way I would maybe describe it is we are not quite taking the risks that you would want of a young person when it comes to going out and finding a job and meeting someone and dating people and making friends and participating in the world. Online, it's a totally different story. Online, we are often engaging with our burner accounts on social media where we can kind of protect our identities and say whatever it is that we want to say on Twitter, on Instagram, on TikTok. And then the discussion we're having in the markets, in the financial markets, no question we're the most risk-on generation, and it's not even close. If you're looking at options trading, if you're looking at crypto, if you're looking at sports betting, if you're looking at prediction markets, all of the riskiest assets and the riskiest trading behavior that is available to humanity, it's Gen Z that is leading that charge. So it is an interesting distinction. I think if I had to parse out what the difference is, I would say there's real life and there's digital life, and we have different risk appetites in those two realms.
So do you think they're taking sort of these maybe sort of big financial risks then just to feel alive because they're not otherwise?
100%. Yeah. There's the question of, do you feel alive in the real world, and can you sort of replicate that feeling of risk and experience and a thrill of something that you can sort of do from your Robinhood app? And then there's the question of, how are they actually going to have a stake in this economy? An economy where if a third of us are living with our parents, and if half of us are being supported in some way by our parents financially, and if people feel that housing costs are too high, which they are, if they feel that college costs are too high, which they are, then you're looking for new opportunities to participate and probably looking for more risky avenues to participate. And that's where all of this risky financialization comes in. So my answer to that is 100% yes.
But Kyla, so what do you think about, do you think Gen Z is also maybe suffering from some sort of lack of financial literacy?
So my answer to the first question, which informs the financial literacy aspect, is that there's sort of a barbell theory. I've been traveling for the past year and a half to several different cities, and have had the opportunity to talk to a lot of young people across 20 college campuses about their lives, right? And what I've noticed anecdotally and what's starting to show up in the data is that there's two approaches to risk. So some young people are becoming what Wall Street Journal has titled the tool belt generation. So they're like, I'm not gonna go to college, I'm gonna go and work in the trades, I'm gonna become a plumber, electrician. That seems like a more stable path. It seems like the more rational path. Versus college, we're starting to see the college wage premium begin to shrink, right? It's growing a little bit again, but the amount that people make with a college degree is less than they would expect relative to people who don't have a college degree. So that's informing some of the decision making that we're seeing with young people. And then on the side of meme coins and sports betting and crypto, what's interesting about that is Gen X actually owns the most crypto out of all the generations, but Gen Z tends to trade it the most. And so part of that is aspirational displacement. So for young people, like Ed said, they're thinking about buying a house that's increasingly out of reach. All the major cities, home prices, you hear about it all the time. It's really tough. And then the career ladder is looking more and more uncertain. So there's a paper out of Stanford, Canaries in the Coal Mine, that talks about these entry-level jobs starting to be displaced by AI, right? And so for young people, they're looking around at this situation, as every generation does when they're young, and saying, how can I make the most out of this? For some people, it's reducing risk. It's saying, I'm just gonna go the path of becoming a plumber, an electrician, doing trades, or I'm going to bet on everything, right? I'm gonna meme coin, I'm gonna gamble, and both of those are pretty rational responses to an incredibly irrational time. And so I think that's like one thing I would say about the situation that young people are finding in the economy is that they're being pretty adaptive, they're being pretty resilient. And I think that's important when we talk about young people in this context, is we make sure that we're giving them credit for some of the factors that they're facing. And then in terms of financial literacy, so my day job is running an economics education company. So I spend a lot of my time thinking about financial literacy, trying to do what I can to help fix it. And part of the problem that a lot of people have spent a lot of money trying to figure out is, how do we put economics education into schools? There's not enough time in the school day for students to have time to study economics, because then they would have to replace it with history, or replace history with economics, or replace gym time with economics. And so that's one problem that we're staring down. And so I think with financial literacy, we haven't given people the proper tools to understand the world around them, and then they do tend to make maybe questionable decisions about the economy. But again, I think some of those decisions are rational given their circumstances.
So when you say this barbell, are this like some people are big risk takers and some aren't? Or do you have some plumbers who are also day trading crypto?
You definitely have a mix. I mean, I think one thing that, we mentioned on stage already is sort of Robinhood. The apps have really made this sort of thing very accessible, and they've really incentivized it, and they've really gamified it. And so all you have to do is just open up your phone, and you have access to tools that 30 years ago would have been very difficult to find access to. So I think the two definitely, that's not mutually exclusive. There's definitely overlap, but I think what I've noticed just anecdotally is people tend to sort into either camp.
So a question to, I guess, both of you as well is, they've also, if you're under a certain age, the financial crisis isn't really so much in your financial memory. Do you think it's also that they've just only seen crypto and stocks go up and maybe just aren't fully aware of downside risk?
I think that's definitely a part of it. One thing that we've seen is that retail and young people especially have this reflexive habit of buying the dip. This is what we do every time. When we had Liberation Day and when the tariffs went into effect, you had this massive sell-off that was primarily among the institutional investors that were very worried about what was happening in America. Young people have looked at their relatively short time frame, and they've seen the stock market always goes up, and so they reflexively are always buying the dip. And so you saw this massive retail appetite in stocks and also in options. And that's, again, what we saw with these China tariffs on the Friday before last, where we had actually the record single-day volume of options trading, again, because young people love to buy the dip and they love to trade on this stuff. So I think that is definitely a piece of it. I think that we haven't really experienced what a true recession feels like. I think there's also probably a little bit of a disconnect between our understanding of what happens in the financial markets and how that bleeds into the real world. So I think perhaps once that happens, and it's going to happen at some point, perhaps the risk profile and the risk appetite will change for young people, and perhaps there will be a little bit more of a connect between the way that the real economy actually does have some relationship with the stock market. But right now, and I think this probably goes back to what Kyla has been talking about with financial literacy, which I think is a huge problem, and it's why I also think that a lot of the work that Kyla does is so important. If you don't understand the relationship between fundamentals and the relationship between cash flows and how that relates to a stock price, then you have no real incentive to look at those things and to understand them. And if you've been doing that up to this point, you've actually been rewarded. I mean, if you look at crypto, if you look at gold, if you look at all of the unprofitable tech stocks right now, those are the ones that are soaring right now, and it's really retail that is driving that momentum. So up until this point, I think that is certainly a piece of it. I think the question is, what happens when something snaps? And people are finally talking about this a little bit more, at least when it relates to AI and the potential bubble that is forming in AI. But we don't have much experience with that. We haven't really seen how it affects people other than the generations that came before us. So until then, I think we're going to continue to sort of YOLO into these movements.
Although presumably, if you're living at home, I mean, I guess you can handle a financial setback.
That's a big piece of it too, and another example of this disconnect between what is happening in the real economy and what is happening in the financial economy, what is happening in the stock market. So if you don't see what's happening, if there is a pullback, I mean, and none of us really do, especially if you're siphoned in your basement, especially if you're glued to your screen, then you don't really have a real sense of the ways in which markets impact the real world. There is a more abstract understanding, I think, of how the real world works for young people. And I think it probably plays into it.
Yeah, I mean, what is it about the living at home? I mean, is that purely that housing costs have gotten expensive? Like, I went through a rabbit hole of TikTok financial advice and was actually pleased. It wasn't as bad as I thought it was. Most of it was like actually quite useful. Like the things I wish I'd learned earlier, like how to open a brokerage account and buy a mutual fund. Like it was actually not bad.
Probably watching Kyla's videos.
Yeah. But one thing that really struck me about it is they're like offering financial tips, and they were saying to people, yeah, in their late 20s, like, well, a good way to save money is to live with your parents, which was like when I was in my late 20s, that was what would happen if your life fell apart. Like, you know, like you were divorced or, you know, you lost your job. But they're just like, it's a great way to save cash or to buy a home. Like, what do you think do you think it's just that housing is expensive, or do you think there's just a generational shift in terms of independence or a different, like, less need to individuate, or what?
So John Bryn Murdoch over at the FT who, has written about this very well. And so he has a chart showing in several of the advanced economies, you know, across the world that this is something that's happening. In Europe, it's a little bit more accepted. In the US, where like, you better be out of the house by 18. And I think the data shows that like in the 1990s, the average age that people left home was 23, and now it's 26. So people are staying at home longer. And I think part of what the data is also telling us is that it is driven by housing costs. But it's also driven by people like taking out a gigantic loan to go to college and being like, I also can't afford my dorm. And so I need to stay home to save rent and save some money. So when I graduate, I'm going to be in a better spot. And so I think people are just trying to soften their financial pad, their like launching pad. And I think it makes sense. And the unfortunate thing about it is that it ends up delaying all these other life milestones. So getting married, having kids, you know, going after that first career, you know, job that you might want. But yeah, it's definitely, I think, you know, the data shows that economic circumstances, because housing's so expensive, people just have to live at home. And I think it's a you know, flashing red sign that we have a major housing crisis in this country.
Yeah, I would plus one to that, I don't think you can blame young people for living at home. I think it is the economic circumstances. The big ones, housing, where the cost of housing is 6 times our income today. For our grandparents, it was 3 times. And college, the 2 ones that Kyla just mentioned, which is 42% of our income. For our grandparents, it was around 13%. So those are the reasons. You're not going out and living in your own place because it's too expensive. It's quite simple. The other side to it that I think deserves some credit is the screen addiction, which I do think contributes to our inability to get out there and pursue jobs and pursue real life experiences, because screen addiction, yes, screen addiction, the obsession with the phones. Because when you just think about like the way that our day works as a young person, we're spending, if you just annualize the amount of time that we are looking at our phones, it's around 109 days out of the year. So if you're on the phone for 109 days and then you're sleeping for 105 days, then you've got like 150 days left over to do all of the stuff that you're supposed to be doing in life. And so the way I kind of think about it is it's like we're almost operating with, in addition to those economic circumstances, which are extremely difficult, there's also an issue of time where we're actually operating with 40% less time than our parents did when they were our age. So it's almost this double whammy of like, the economic situation is not great, and there are many reasons for that, and a large piece of it is inequality and the age of Congress and the unwillingness to sort of pass the baton to the younger generation. But the other side of it, which I think makes the problem worse, is the technology and the fact that we cannot really take ownership and agency of our own lives because these devices are so crazy addictive. And we're the first generation in history to have lived our entire lives online. Like from the time we were growing up, we had phones and we had devices. So I think that's a big piece of it, which again is why I like what Kyla emphasizes, which is like you can't just say it's young people and they're like lazy or they're avocado toast stuff. Like it's that is a lazy explanation for what is actually going on. I think you have to look at, okay, what are the circumstances that they have been thrust into?
Well, I mean, the technology is new, but I kind of like always like bristle at whenever we say, because every generation sort of enters the labor force and seems to think they had it harder than anyone else. In that, you know, in some ways things are harder. Housing costs are high. But then again, in the early 80s, interest rates were also enormous. You were facing a really bad recession. And yeah, people have student debt, but they also are a lot more likely to have a college degree, which even if the college premium is shrinking, is still positive. I sometimes think the issue is that being in your 20s, like, we don't often acknowledge that it's legitimately hard. I think it's just hard to establish yourself in life economically, form a household, establish a career. And we get very caught up in which generation had it harder, easier, rather than, I think that's second order to the fact it's just, well, hard to be in your 20s.
Yeah, I mean, one thing that I said to give you all a behind the scenes on our prep call was that I don't think it's always helpful to frame this in terms of generations. Mm-hmm. Like, I think some of the problems that we're talking about supersede generations, like the housing crisis. I'm pretty sure that impacts everybody as far as I'm aware. And I also think, you know, the phones, like, you know, a lot of baby boomers are having a very tough time with AI and, you know, understanding what's real and what's not. And so I think like what we're talking about with young people is sort of specific to like, okay, what does it look like to get an entry-level house? Like that obviously is quite difficult. The entry-level labor force is being displaced by AI, and that's pretty difficult. And then there's also like the post-pandemic effect. You know, it's been 5 years, but it feels like yesterday, I think, for a lot of people. And so I think there are these like factors that every generation has had to sort of navigate and has had to face. And the question is, okay, what do we do about the factors that we're facing with right now? And I think to Ed's point about screen time, what's interesting is that John Byrne Murdoch, who he paid me to keep talking about his articles, but not really. But he has a good piece out talking about how people are actually using social media less. And so what social media used to be when it first started was like a way to connect with your friends. But increasingly people are using it as a way to get news, or they're like following celebrities, and that's kind of serving the purpose for that. So people are using it primarily as a tool for that. And I was at an interesting lunch yesterday where somebody was talking about how his daughter uses Snapchat as social media used to be, right? Like as a way to chat, as a way to talk to your friends. And so I think like the role that social media is playing in our lives is also changing. And so we have changing technology in the form of AI, we have a shifting housing market, and then we have shifting social media. And so I think part of the, I'm on a few panels talking about young people this year. I think part of the reason that is because we are in this time of immense transition. And so we're sort of at like, I think maybe the sharpest pain point for this generation, because like we have new politics, we have new technology, and I think that is like kind of the core driver behind a lot of these conversations. But I think it's very good to expand it beyond just young people, because these problems affect everybody.
I kind of disagree actually, or with the idea that it's the same for every generation. And
Well,
granted,
not the same. Every generation has their challenges.
yes, every generation has its challenges, but I don't see. I think we have a very unique set of challenges. And granted, I'm Gen Z, so I'm biased, rich coming from me. But when I look at the data in the economic situation specifically, and the interest rates point is an interesting one, but I also see interest rates as more flexible. And when you look at just the cost of housing in terms of rent, and also the cost to just buy a house, it's been so high for so long, and it's only gotten worse, and it's gotten stickier and stickier. And again, I said 6 times our income to buy a house today, 3 times for my grandparents' generation, 4 times for my parents' generation. And I look at the way that the distribution of the great wealth that has been created in America over the past like 50 years, where productivity has outpaced wage growth by 3 times. I see that as a fundamentally different economic setup. And I think that there are different issues that we don't have to deal with. One thing that I think about a lot is we don't have to deal with going to war. That's less of a issue for our generation. Like, it's a totally separate set of things that we're dealing with. But I do think that it is a unique set of challenges. I think the economic situation is less amenable to giving young people a shot today than it was 50 years ago. I think that the screens have made it more difficult for young people to have agency and ownership over their lives. I think it is more difficult than it was 50 years ago. And perhaps that you can make the argument, well, what's the point in comparing? And I think that's fair. I mean, complaining about it, we had it so hard, is not that constructive. But I do think there's value in recognizing the ways in which this set of people has a different setup, which likely means we need a different set of solutions. We need different, more creative ways to address the problem. So I guess that's how I think about the generational differences. I do think there are differences. But again, I'm Gen Z, so I'm biased, and I wasn't there.
Should you be buying a house in your 20s? I mean, is that a good aspiration? I mean,
Well, I think so. And the average age of a home buyer 50 years ago was 30. I mean, maybe not 20s, but like maybe when you're 30. Today it's 50. So I think buying a house is a great thing. It's a form of forced savings. It's a way of committing to a partner and establishing a family and building a life together. You're committing, you're making a long-term investment, not just in the asset itself, but also in your life. We don't have access to that asset class anymore. We simply don't, as reflected by the numbers. So I do think that would be a far better use of our investment than crypto or any of the meme stocks that we're talking about. I would rather be buying a house at 30 than going 50x leverage on perpetual options futures on Bitcoin. Like, there's a fundamental difference there, which I do think would be better for our generation.
what kind of, I'm curious, I mean, buying a home at 27 or S&P 500 index fund? I mean,
Yeah, I mean, so like I was just up in New Hampshire at the New Hampshire Housing Conference, so I got to talk a lot about housing. And New Hampshire is actually the second oldest state in the country. So they're also facing this demographic problem where a lot of their older people are locked in. So that means that they're going to have a very hard time selling their house. They can't actually afford to move. So like that's also one of the issues with the housing market is that people who might want to move like can't afford it, which is a whole other issue. And then another issue with kind of solving the supply side of the housing problem, which is like a key part, is the water infrastructure and the sewage infrastructure. So I met this guy who specialized in that. He was a civil engineer, and he was like, listen, people can rezone all they want, but until we figure out how to expand water infrastructure, we're not going to be able to build more homes. And so the housing crisis is very complex in nature, which is why we spend a lot of time talking about it. I got to interview Wally Adeyemo, who is the former Deputy Secretary of the Treasury in the Biden administration, about the policies that they were trying to pass. It was a lot of zoning reform. It was a lot of tax credits. It was a lot of financial incentives to help people like get that first down payment down. But then fundamentally, it comes down to, well, how do you build better infrastructure? And like that's a little bit harder to fix, right? Like how do you tell people that their water line is going to have to be expanded? And so I think in terms of like, the policy side of the housing problem, like a lot of people have been spending a lot of time there trying to figure out what to do, but that's like the biggest takeaway that I've had is it's an infrastructure problem as well as a housing problem. And then I think in terms of like if people should buy a house or invest in the S&P, investing in the stock market is still quite a privilege. A lot of people don't have access to it. A lot of people don't necessarily have the money that they might want to do something like that. And I think that's challenging. And so the American dream has always been, you buy a home and you have the family and you retire and that's good. But as that's becoming more out of reach, you have, what I talked about at the beginning, which is that idea of aspirational displacement, as you talked about as well, where people, they're like going to buy crypto because they can't buy a house. They have some extra cash, but they cannot like make it.
Presumably, they could buy the S&P 500 rather than crypto.
Yeah, sure. Two different people, right? Some people can't invest at all. They just don't have the excess capital.
Yeah.
And then some people have a little bit of money. They would like to buy a house and they can't. And so it's like, well, what do you do from a policy side? Like, how do you solve these problems, right? And I think that's the more interesting space to like think about is like, how do you make it so people who maybe want to invest in S&B can, people who want to buy a house can, and that's where a lot of people are spending a lot of time.
I mean, you're talking about the American dream and how it feels inaccessible. Do you think the Gen Z American dream is the same American dream, say, boomers had, or is the American dream also changing and maybe also becoming less obtainable?
Yeah, I mean, I just turned 28, and the way I think about my personal American dream is that I have achieved the path of entrepreneurship, which is very cool. Like, I run my own business. It's pretty awesome. It's very nice. But like getting a house, that's a little out of the picture, it's a little too tough. And a lot of my friends are in that similar boat. And then I think there's also a preference towards optionality, right? Like a lot of people like to move around. They want to be a little bit more nomadic. There isn't that tie between employee and employer as much as they used to. People tend to job hop, so they're not necessarily going to want to be tied down to a house. And so I think, the trends that we see in younger people, according to the data, is that they do prioritize that optionality. They like to jump around, and I think the American dream evolves to accommodate that.
I just want to go back to the thing you said about the S&P versus buying a house. 100% that's what young people should be doing, and they're not doing enough of it. And again, you got to think about, okay, why is that? And again, I think it does come back to financial literacy. I think that a lot of young people find the phrase, the S&P 500, to be a very boring phrase. And I think a lot of people don't really understand what it is or really know what it is. And they don't really know that actually this is kind of the most remarkable investment vehicle that kind of exists in the world. Yes, you can get like 10% returns over every year over 20, 30 years. And so I think that one thing that I think about a lot, and again, that I think is important work that Kyla is doing is educating young people that that is a way that you can build wealth. Because the housing thing, it's not going to be possible. You can't do it. I mean, Kyla is one of the most successful people that I know, probably the most successful person around my age that I know. And she just told us that buying a house is like not really on the cards right now. So I think the thing that young people need to understand is like you have a difficult hand, and the solution to that isn't going to be buying these crypto and meme stocks and falt coins. That's an actual cryptocurrency that exists, where they're convinced, because you see on social media people like Andrew Tate who says, if you buy this crypto, then you too can be driving a Ferrari around in Eastern Europe. He's also like on lockdown, and he also actually made his money running like a prostitution ring. But they sort of paper over that and they say, okay, if you buy the crypto, here are the returns. And you only hear those stories when it comes to crypto. You only hear those stories when it comes to meme stocks. You only hear the stories of the people who made millions and billions on what I believe is BS. You don't hear the stories of the people who are losing money on these investments to the tune of billions of dollars. And these Bitcoin treasury companies, we just had a report this week, a cumulative $17 billion lost among retail investors on these Bitcoin treasuries. Trump coin, where you had this small handful of insiders who made $1 billion, and people go, oh my God, let's buy Trump coin. And then you don't hear about the fact that 400,000 people lost a cumulative $4 billion on that investment. So I think your S&P 500 point is a really important one, and it's one that young people need to understand. Yes, you have a difficult hand. Yes, this housing market isn't very fair, and we were kind of lied to about college. However, there is a way to build wealth, and the way you build wealth is participate in the US stock market, buy the S&P 500, do the boring stuff, have a savings account, save more money than you spend, invest it in the stock market. I think that is a big piece of getting our generation on track.
Yeah, I hope so. Although to Kyla's point about how people, Gen X is like big in crypto. It's not just financially. I was just at a like very sophisticated financial conference, and I met two people, Gen Xers, who had like Harvard, like Ivy educated lawyers who had big jobs in crypto litigation or some legal thing. And I asked them both, like, what's the use case for crypto? And neither had an answer. And I'm like, wow, you're not only investing your money, but your human capital in this, and you don't even know what it's for. So, I guess no generation has a monopoly on bad decisions.
I'm completely with you. I'm very against crypto as an investment. I've struggled with the same issues, but it is an interesting political rift that is growing on this issue of cryptocurrencies. I'm not totally sure how to deal with it. I think the reason that a lot of people fight back so fervently when I say I don't really see the use case here, and we can get into a rabbit hole of which ones are useful and which aren't. I think you can make a case for Bitcoin, but only a fringe case. But a lot of people, I get a lot of pushback, and then sometimes I'm thinking, is this pushback because you disagree with me, or just pushback because you have invested a significant part of your portfolio into this thing, such that you have to argue for it, otherwise you're going to get burned? I don't know. I have a sense that is a big piece of it, but it is really interesting, and we are seeing more of this speculative investment, again, that is not really tied to what actually happens in the real economy. Bitcoin and none of these cryptocurrencies actually generate cash flows, but young people seem to not care about that because they haven't been taught about the significance of what that actually means. And so they tell you, well, the price is going up, so it's fine. And so far, they've been right.
So, like, other curious things, there's always a trend that when people are younger, they tend to be more left-wing and then get more conservative as they pay taxes and stuff. But there is a striking, even, amongst, like, nothing to do with even who they vote for, sympathy and enthusiasm for socialism amongst younger people. And it's certainly, like, say, driving a lot of the enthusiasm in the New York mayoral race, like, people in that age group. Why do you think that's like, social media coaching? Do you think it's like frustration with sort of their economic situation? Like, what is this about?
I've been thinking about this a lot. I'd be interested to hear what you think, Kyla. I think that it is all downstream of all of the statistics that we have highlighted about how the economy and how the system isn't really working for young people. There's the economic data, and then there's the lifeonomics. There's the fact that so many of us are living at home, the fact that so many of us are being supported by our parents. And that, I think, feeds into a feeling that the system doesn't work for me. And so to your point, we are seeing increasing distrust in capitalism. Faith in capitalism is actually at a record low in America right now. Only 54% of Americans believe in capitalism. And interest in faith and the likability of socialism is at a record high right now. And we're seeing that reflected in the mayoral race. What's interesting is this has happened before. It happens a lot throughout history. It happened in Europe and Eastern Europe. And this is what Marxism and communism was all about, where it was, and this is what Karl Marx said, it's not actually about left versus right. It's about top versus bottom. It's the fact that we're seeing so much capital and so much influence and wealth that is accumulated into the top 1%, and the rest of us are starving. And that was what he tapped into, and he correctly identified. And so that resonated with so many people because it was such a problem, such that the ideology started to spread, and then it moved into Russia, and there was a feeling and a belief that caught a lot of popularity that led to the Soviet Union, where people said, the system doesn't work because look how the czars of Russia are living and look at how we're living. And they created a system that led to the death and destruction of millions of people. I see us on a similar path. If you have 19 households that control 3% of all wealth in America, if you have the top 1% that control half of the S&P, we're just running back the same cycle.
But are we seeing this I want to get Helen, but like this enthusiasm for socialism, is it coming from the bottom, or is it coming more like it often did in Russia with this bourgeoisie? And I think this is something we're seeing in the mayoral race too, is like, people who are raised upper middle class who feel like they're not able to replicate the life their parents had. Kyla wants to jump in, if you just want to stay out.
It's an interesting point, and I think that either way, the truth remains. Mm-hmm. It's like people are realizing this. People are seeing it in the data. People are seeing it in their daily lives, this extraordinary wealth and power and influence that is being sequestered into the hands of a few. And you can see that even if you are upper middle class, even if you are living in New York, and you can see what's happening. You can walk through the streets and be, actually stepping over homeless people, and then a block later, you're seeing extraordinary wealth. That's what I see in Manhattan. And you can see that and you can say, I don't think this is good. I think that's what's happening. And I think the part that I am concerned about is I don't think that socialism is the path forward, and it does feel as if this is going to be sort of the referendum of our time. Do we like capitalism or do we not like it? I like it. I think it needs to be more regulated. But I do, it's an interesting point you make, and makes me believe even more so that we're seeing these cycles repeat.
I will actually jump in. But there's an interesting book by, I believe her name is Catherine Liu, Liu, and she talks about this like professional managerial class and sort of the backlash and, the navigation. But when you started asking your question, I thought you were going to not say socialism, but say populism. And I thought you were going to ask about Trump. And so I think that just shows like kind of the divergence in the political environment right now. Like, young people did drive a lot of the vote for Trump, and the reason that they did vote for him was because they were concerned about the economy. And so I actually think Mamdani is the most Trump-like candidate the Democrats have ever produced, because he is so good at messaging and because he is so good at reaching people where they are, which is what Trump, if you like him or not, and if you, Mamdani, if you like him or not, I think both of those people are really good at messaging and telling people, hey, you know, I see that you're hurting, and like here may be some solutions. And so I think on either end of the political spectrum, we're seeing backlash to what some people might call the status quo, whether that be the form of capitalism that we have, if you can call it that. And I think that it makes a lot of sense, as Ed was saying, that we're starting to see people be like, well, what if there's a different way to do stuff? And like, maybe we should explore some of those policy ideas. So it's all quite logical. And then Catherine Liu, who I referenced at the beginning of my comment here, she's written a lot about sort of the struggle that the professional managerial class, like what some might call the laptop class, is struggling with. And I think it actually is pretty full circle to what we were talking about at the beginning of the presentation, where it's like, okay, I graduate with a college degree, what are my options, like to work for McKinsey? Like what else is there? And so I think, it's a time of transition for the economy. This will be my final point, but there's a really interesting online magazine called Phenomenal World, and they wrote this really fascinating piece about what the next age we're gonna be in, like what will that look like? So we've been in the information age for a long time, like data has been power, you know, companies that have controlled data streams, have controlled user data, have really taken over. You know, think of the Magnificent Seven in reference to the S&P, so Facebook, or Meta, NVIDIA, Apple, like all of those companies are really good at harvesting user data and selling it. And so what Phenomenal World argues in this piece is that the next age is going to be the renewable age. It's actually going to be a focus on the real world, and it's going to be a focus on how do you generate real world energy, like solar, like wind power, like batteries, like nuclear. And the country that's actually winning that race is China. And so I think like kind of what we're talking about and what's been simmering under the surface of this conversation is this transition where the US is maybe not keeping up with whatever age we're about to go into. And that could be like why this discontent is popping up and why people are like, I don't think this is working. And there's truth in raising your hand and saying something like that. But I think that point that perhaps we are entering a renewable age and perhaps rolling back policies on solar panels is like not the best thing to be doing, is something to be considered when we talk about what we're talking about right now.
All right, so one last question before we go to audience questions. So you both have made a successful living, I think, putting out useful economic ideas using sort of the new tools of social media, which, or I guess it's not social media anymore, it's just the new media. I mean, there's also a lot of really bad information. We seem to focus a lot on the bad. On balance, you know, I sometimes think about it as like, you know, the printing press caused some bad stuff, but on balance, it was good. In the end, you know, we became a more literate, more productive society, arguably underpinned all the innovations of the Industrial Revolution, and that was pretty good. What's your view on social media? Is it both, or media, both being, do you think in the end it's gonna be good in terms of our knowledge of the economy or bad?
Do you want to go?
No, I'll go first. Yeah, I have this is like my talking points in my head on this topic. So I post on social media, and I've been doing it for 4 years. And the reason I started doing it is because it's where people get their news, especially young people. And so I started doing it pretty much during the pandemic when I was all alone in a 350 square foot apartment in Los Angeles. And I was going a little crazy. And I was like, I need to talk to somebody. I had no friends in LA. And I started making these videos, and all of a sudden I started meeting people who were like thinking like me. And I was like, whoa, this is so cool. I grew up in Kentucky. And I didn't meet a lot of people who were super interested in the stuff I was interested in, like options trading, funny enough. And so it was such a mind-blowing thing for me, like to use social media, to be posting these ideas. And then now I feel like the way I think about it is you interrupt people's scroll. So like that's how I think about the work that I do, you know, posting, like today's video is gonna be on this new paper out of the Vanderbilt Policy Accelerator on the loyalty trap, so how rewards programs are actually data harvesting schemes. And, you know, people will be scrolling on social media and they'll get this hopefully like really good tidbit about the economy, about this really interesting research paper. And so you just have to go where people are, and it's room rooms like this, which is always so fun to be a part of, and I'm very grateful that you all showed up today, but it's also places like social media. So hopefully we can all come together in a room like this one day, but for now it has to be digital. So that's the way I think about it. It's a tool.
People probably tell I'm kind of a pessimist, but the things that make me optimistic in terms of social media and overall value, because that's what you're describing,
Yeah.
right? Like, can it? Yeah.
Well, is it overall optimistic, pessimistic?
Yeah. I mean, people like Kyla are the kinds of people on social media that we actually desperately need more of. And I do think that legacy media is beginning to kind of catch on to this. I mean, one thing that I found fascinating is that the Wall Street Journal is now hiring a talent coach to train their journalists to become influencers, because they recognize that they need to get off of print and they need to actually get off of the laptop screen, and they need to get on the phone and they need to put their people out there and interact. And I think having more of that content on the internet and on social media could be beneficial to society. Overall, though, net, I think that social media has been mostly a negative. I think that it has taken over our lives in terms of the amount of time that we spend on it. I think that it has made us angry and enraged because the algorithm doesn't, I mean, unless you're really, really good at what you do, the algorithm does not really reward moderate, informative content most of the time. Usually it rewards clickbait and things that make you angry and rageful. So I think it's made us more angry. I think that it's caused real problems when it comes to relationships and getting young men addicted to porn and not establishing real relationships with real people. I think these are all real problems. The thing that I'm optimistic about, one, more people like Kyla, and two, I think people are waking up to this, and I do think we're going to start to see some actual regulation on social media. Seeing it in Australia, where they are banning phones for people under the age of 16. We're beginning to see it in Europe. I think that's the path forward. I think most people kind of agree on that. So I guess I'm optimistic about perhaps some regulation in the future.
Great. So does anyone have questions? I'll let you decide. You were the one with the mic. Okay.
Thank you. Hi. I had a question for both of you. And Ed, I know you've talked a lot about the potential AI bubble, but I am curious for both of you what your thoughts are on if there is a bubble and if it bursts, given the level of concentration, the circular financing and all of that, what it means specifically for Gen Z. I think in some ways you could argue, they have so much time in the stock market, it doesn't matter, but there's not, a lot of them are not even in the stock market. So I'm just curious what you think through specifically for the younger people.
I think the impact of the bubble bursting will be a little less intense for young people than it is for every other generation, just because of we don't have that much wealth locked up in the stock market. I think what is interesting is, and what we've been looking at a lot is, so much of the value that is being created in the AI bubble is accrued into OpenAI and a handful of private companies. So one thing we've been trying to think about is, like, say OpenAI implodes for whatever reason, and the likelihood is going up when you see the amount of deals that they're making. Sam Altman wants to spend $1 trillion over the next 10 years. Where is he going to get the money from? Doesn't have the revenues to do it, doesn't have the profits to do it. But what is interesting is the fact that these companies are private, and so it's not actually clear how many people will really be impacted by it. So at first you think, okay, maybe this will be kind of contained. The other problem, though, is so much of the value in the stock market that we've seen, I think it's been like 75% of the gains this year is AI. So much of that is contingent on OpenAI. So I'm kind of still struggling with that question. I think it will be big because of the run-up that we've seen. As it relates to Gen Z, I'm less worried about what it will do to Gen Z compared to what it will do to other generations.
I'll just jump in quickly. So it's also 40% of GDP growth, which is super scary. So I think that's also really concerning, as we have like two pockets of the economy that are doing something, AI and healthcare. So the only jobs that are being added are in healthcare and social services, or at least the last time we got government data, that was what we learned. And so I think that's extremely concerning and has like huge implications for everybody, especially the data center build outs, like $7 trillion. I think McKinsey estimated by 2030. So like it is a massive amount of money, and like all of the, a lot of money has been going towards this instead of perhaps toward other things. And I think also to the point of future of work, like career ladders, Klarna, Duolingo, they're like entry-level workers can be AI, and like a lot of companies are experimenting with that. And so if all of this ends up blowing out, I think you're going to have a lot of young people who are extremely disillusioned with the workforce, and they're like, okay, you're going to replace me with technology. The next time I turn around, why would I go work for you? That's one theory. And I think you're going to see a high level of distrust and nihilism. And I think the worry with me for the AI bubble is that it is both very, very physical, in a way .com kind of was with Fiverr, but like less so because it was pets.com instead of like this giant AI company. And so I think that's concerning. And then it's also incredibly intertwined and increasingly trying to be so with the labor force. Final point, sorry, is I think now they're focusing on social media. So they have Sora, OpenAI has Sora, which is their video generation app. He also said that there's like an air horn. Do you all hear this? What's it's like a little like good job.
Cheering us on, yeah.
Yeah, but social media, and then now it's doing erotica, and it's just like it's going so south, I think, and it's clear that they don't have maybe a monetization path. But that's my fine. I write about this a lot too. But yeah, it's very concerning. Yeah.
Hi, thank you for being here, Ed and Kyla. I would love to hear your thoughts real quick on how this is intertwined with gender norms that are being questioned or changed for Gen Z, and how much of is it hype, how much is it real? I think there's this sense of where you can't ignore how much, whether there's backlash against Me Too going too far. I mean, Ed, you talk about this a lot with Professor G. Kyla would want to hear your thoughts, of course, of where there is just clearly a diverging perspectives between a stereotypical view of what masculine and feminine roles are changing, and it's just so intertwined with economy right now.
Do you want to go ahead? Yeah, this conversation has exploded, and it's so interesting because, yeah, my boss and co-host, Scott Galloway, talks about this a lot, and he feels very, very passionately about this issue, about the issues of young men. And there are statistics and there is data that would demonstrate that young men are struggling. When you look at suicide rates as an example, we were talking about gambling and gambling addiction, which is mostly prevalent among young men. When you look at college participation, where college participation among men is declining. I think that these are valuable only so much. And I worry that we get too obsessed with who's having a harder time between men and women without recognizing that actually all of us in this generation are dealing with a lot of issues. And I'm glad that the issues of young men have been talked about a lot more, but most of the statistics that we discussed today about the ways that young people are struggling in the economy are not attributed to one gender or the other. It is all of us. So I appreciate that question. Sorry I don't have a real answer on it because I kind of struggle with this in my head, but the way I see it, I think there is more value in trying to address the problems of young people as a whole instead of trying to divide among men and women, because I just find that it can often lead us to a somewhat unproductive place. And it becomes very tribal and political in a way that I don't find that constructive. So my view is, I'm glad that young men, their struggles are being paid attention to, but young women have many struggles as well. I'm more interested in how are we all doing collectively.
Right, we have time for one more question.
I hope this is a good enough last question. The world is very divisive. You talked about rage. I think of your generation as very collaborative. Do you guys think Gen Z has the instinct and the ability to solve division?
Yeah, I mean, like one thing that I tried to highlight during one of my comments was the adaptability and the resilience of the generation. I think, as Ed pointed out, like social media maybe isn't the best thing for bringing people together. I think it's also useful in many ways because it can, like, I mean, I met Ed through social media, like that's great. So I think there definitely can be, but like it comes down to incentives. So Dr. Yana Gallus, who's at UCLA, does a lot of work on incentives and like how do you realign incentives. Like many things are misaligned right now. And I think when we think about divisiveness and polarization and people not getting along, it's like, well, why is that? There's usually a root cause beyond just like people not liking each other. Like when you go out into the world, like most people are quite nice and they're good to each other. It's really online where we see that sort of polarization. And, you know, part of that is the responsibility of social media companies. And then how do we teach civic engagement a bit more cohesively and holistically? Yeah.
Yeah, I think it's a really important question. I have a feeling that at some point young people are going to say we're fed up. And Kyla, I believe you mentioned that data that young people are beginning to actually slightly turn down their social media usage. That to me, I mean, we'll see if that continues. I get the sense that we're a little bit fed up and at some point we're going to say enough. Whether that means we're going to show up in a real way when it comes to voting, and we haven't really shown up for many, many years, still the lowest voter turnout of any generation by far, or whether it maybe means reapproaching our sense of relationships and connecting with each other. And maybe that does mean getting off of social media. And you know, something I've been thinking about, you know, we could try to protest, we could try to get out and take to the streets and say, this is what we want. The single most impactful way that young people could organize and have an effect on society is if we all got together and just turned off the phones at the same time. If we did that, it would completely upend the entire way that our economy and our society is structured. It would completely transfer power from a set of players into an entirely new one. I don't know what that would lead to. I don't know who would get the power back. But the point being, I think that young people are getting fed up. We are reaching the end of the fuse. And I hope that it could be some sort of collaborative way that we get together and say, okay, how do we make our futures more prosperous for us?
That's a nice note to end on. So thank you so much for joining us.
Thank you.